Welcome back, everybody, to the deep dive. Ready to dive into some more fascinating market knowledge?
Always ready.
Today, we're looking at, it's a classic, really
Yeah.
a book on technical analysis, but what's interesting about it is it's been updated for the modern trader.
Right.
Sometimes those older investing books,
Yeah,
they have those nuggets of wisdom that are still relevant today.
absolutely.
And our goal is to unearth those for you and help you use them.
I think that's a great goal.
It's a jungle out there.
It is.
There's
Yeah.
so much information,
Right.
charts, indicators, patterns.
Mm,
Where do you even begin?
yeah, it can be overwhelming.
So we're going to break it down for you. And this book
Okay.
really dives into the philosophy,
The philosophy, yeah.
technical analysis.
Okay.
And, one of the things that just struck me was this idea that market action discounts everything,
Right.
which sounds pretty bold, right?
Yeah. It's a core tenet of technical analysis. And the idea is that every factor, news, earnings, even tweets from certain, let's just say, influential CEOs,
Oh, yeah. Those definitely move markets.
all of that is already reflected in the price.
So instead of getting bogged down in the news cycle,
Yeah,
the technician just looks at the price action.
they do. That's right.
That's almost zen in a way.
It is. It's about focusing on what is, not what you think should be.
I like that.
And that leads to the second premise.
Yeah.
Prices move in trends.
Okay.
Trends are like the currents in the market,
Okay.
and technical analysis is about riding those currents.
Okay, I get that.
Yeah,
But markets are chaotic.
they are.
So how can you be sure that a trend is going to continue?
Right.
I'm already thinking about all those times I bought a stock, thought I spotted a trend, and then bam, rug pulled.
Yeah, I've been there.
Ooh.
That's where the third premise comes in.
Okay.
History repeats itself.
Mhm.
Not literally, of course. But human behavior, especially when it comes to fear and greed in the markets,
Oh, yeah.
tends to create recurring patterns.
Right.
And those patterns are what technical analysis aims to identify.
So chart patterns are like footprints in the sand. Left by those who came before.
I like that.
Kind of spooky when you put it like that.
Yeah, it is a little bit.
But also, if you can read those footprints,
Right.
you can anticipate where the crowd might be heading.
Precisely. It's about understanding market psychology through price action.
Mm.
This is one of the key ways technical analysis differs from fundamental analysis.
Okay.
The fundamental analyst might pore over balance sheets, earnings reports,
Yeah.
but the technician argues that all of that is already baked into the price.
So are you saying fundamental analysis is useless?
Not useless,
Okay.
but perhaps incomplete.
Okay.
The price itself is the ultimate expression of all those factors.
Interesting.
Think of it this way.
Okay.
You can have the best recipe in the world, but if you burn the cake, it doesn't matter. The final product is what counts.
Okay. That's an analogy I can get behind.
Good.
But even if we can analyze a market and see a trend, timing is everything, right?
Absolutely. And this book makes a clear distinction between analysis and timing.
Okay.
You can identify a long-term uptrend in a market,
Mm.
but jumping in at the peak of a short-term swing within that trend can still lead to losses.
So even with the best analysis,
Yeah,
bad timing can ruin everything.
it can. Timing is key.
Okay, so I'm starting to understand why this book emphasizes understanding trends as a starting point.
Right.
But what exactly defines a trend?
Think of it like a mountain range,
Okay.
peaks and valleys, but with an overall direction. If
Okay.
those peaks and valleys are gradually rising, you have an uptrend.
Okay.
Descending, it's a downtrend.
Okay.
And Dow theory, which is kind of a foundational concept in technical analysis,
Mm-hmm.
classifies these trends by size, major, intermediate, and minor,
Oh.
like waves within waves.
So you're saying I should be looking at multiple time frames to get the full picture.
Exactly.
It's not just about the daily chart.
It's not. You got to zoom out.
Gotcha.
Look at the weekly, the monthly charts
Okay.
to see the larger context.
Okay, so before we delve into the different time frames,
Yeah.
let's talk about, I guess, kind of the bedrock of trend analysis.
Right.
Support and resistance.
Support and resistance, yeah.
Those sound familiar. Remind me which one is the floor and which one is the ceiling.
Okay, so think of support as the floor,
Okay.
a price level where buying pressure is strong enough to prevent further declines.
Okay.
Resistance is the ceiling,
Okay.
where selling pressure kicks in and prevents further advances.
So if a stock is bouncing between, let's just say, $50 and $60,
Hmm.
50 is likely support and 60 is resistance.
That's right.
Okay, that's starting to make sense.
Good.
But how do trend lines fit into all this?
Trend lines are your visual guide to these price movements. You draw a line connecting the lows in an uptrend or the highs in a downtrend.
Mm-hmm.
And that line acts as support or resistance. Think of it as the spine of the trend.
So if the price breaks that trend line, is that a sign that the trend might be weakening or reversing?
It can be. It's kind of like a crack in the foundation.
Yeah.
And the book introduces this concept called the fan principle.
Okay.
If a trend line breaks, you draw a new one, and if that breaks, you draw a third,
Hmm.
based on the idea that things often happen in threes in the market.
Interesting.
Yeah.
Okay, I'm starting to see how this is all coming together.
Goose.
You've got trends, support, resistance, trend lines. It's like building a framework for understanding price action.
Precisely.
Well, let's not keep those tools waiting. Where do we go from here?
Oh, we got a lot more to cover, so stay tuned.
All right. All right, let's open up that technical toolbox.
Yeah, let's do it.
One of the first things this book dives into is chart patterns. Now, I've seen these patterns thrown around, head and shoulders, triangles, flags. They always sounded kind of mystical to me. Is there really any predictive power in these shapes?
Well, remember the idea that history repeats itself. Chart patterns are a visual manifestation of that principle. They represent recurring market behaviors driven by fear and greed, hope, and despair.
So it's not just about the shapes themselves,
No.
but what those shapes tell us about market psychology.
Exactly. Think of the classic head and shoulders pattern.
Okay.
3 peaks.
Okay.
The middle one being the highest, with the neckline forming a support level.
Okay, I can picture that.
Yeah.
So if the price breaks below that neckline, it's a sell signal.
It can be. It suggests a shift in momentum with sellers taking control. And there's even a technique to project a potential price target based on the height of the head.
Wait, so these patterns can give you an idea of how far the price might move.
It can, yeah.
That's pretty powerful.
It can be, but remember, no pattern is foolproof. That's why confirmation is key.
Okay.
The book talks about using volume as a way to gauge the strength of a breakout.
So if the price breaks down from a head and shoulders pattern on low volume,
Yeah,
it might be a false signal.
exactly. You want to see conviction behind the move, and volume is a good indicator of that.
Okay.
And this applies to continuation patterns as well. Let's take triangles, for instance.
Triangle, those are the ones where the price seems to be getting squeezed between converging trend lines, right?
That's right.
Yeah.
Triangles represent a period of consolidation where buyers and sellers are battling it out for control. And the book points out that the way the price breaks out of that triangle can signal the direction of the next move.
So an upward breakout from a triangle in an uptrend suggests a continuation of that uptrend.
Exactly, but again, volume is key.
Right.
A breakout on high volume adds weight to the signal, while a low volume breakout is less convincing.
Okay, this is making more sense now.
Yeah.
Chart patterns are like roadmaps. But volume is the fuel that propels the price action.
I like that analogy.
It's coming together.
And as we delve deeper into the toolbox, we find even more ways to gauge that momentum.
Well, let's keep those engines running. What else does this book have in store for us?
This is where the fun really begins. The book dives into a whole array of technical indicators, starting with moving averages.
Moving averages, I've heard those thrown around a lot. They're those lines that follow the price chart, smoothing out the bumps, right?
That's right. They help filter out the noise and highlight the underlying trend.
Okay.
There are different types: simple, weighted, exponential, but they all serve the same purpose,
Okay.
to show you the average price over a specific period.
So if a stock's 20-day moving average is rising,
Yeah,
it suggests an upward trend.
exactly.
Okay.
And traders often use combinations of moving averages, like a 5-day and a 20-day, to generate buy and sell signals.
Okay.
For example, a buy signal might occur when the shorter-term average crosses above the longer-term average.
Okay, so it's like those two averages are having a conversation.
Yeah, that's a good way to put it.
And the crossover is a sign of shifting momentum.
It is. You got it.
I like that.
And the book highlights how these crossovers can be particularly powerful when they coincide with other signals, like a breakout from a chart pattern.
So it's all about putting the pieces of the puzzle together.
Yes.
Trends, patterns, indicators.
It's starting to sound less like a mystery
Yeah,
and more like a detective story.
that's the spirit.
That's the spirit, and the tools keep coming.
Oh, good.
The book introduces oscillators like the Relative Strength Index, or RSI.
RSI, that one rings a bell.
Yeah.
Isn't that the one that tells you if a market is overbought or oversold?
Exactly. It oscillates between 0 and 100.
Okay.
High readings suggest the market is overbought, while low readings suggest it's oversold.
So it's like a temperature gauge for the market?
Yeah,
High RSI means things are getting too hot and a cool down might be coming.
That's a good way to think about it. But it's not just about the levels themselves.
Yeah.
The book also highlights the importance of divergences.
Divergences, those sound ominous. What are those?
A divergence occurs when the RSI is making lower highs, while the price is making higher highs, or vice versa.
Okay.
It suggests a potential weakening in the trend, like a car running out of gas, even though the driver is still pushing on the accelerator.
Okay, so divergences are like warning signs, flashing red lights on our market dashboard.
They are, that's right.
I'm starting to see how these indicators can add another layer of insight to the charts.
They can. And this book doesn't stop there.
Okay.
It explores sentiment indicators like the Commitment of Traders Report or COT.
No, that's one I'm not familiar with.
Yeah.
What does the COT report tell us?
It provides insights into the positioning of different groups of traders in the futures markets.
Okay.
Commercials, large speculators, small speculators.
Okay.
By analyzing the net positions of these groups, we can get a sense of overall market sentiment.
So if the commercials, who are often the most informed traders,
Right.
are heavily net long a market,
Yeah.
it's a bullish sign.
It can be, of course. No indicator is perfect.
Right.
And the book emphasizes that the COT report should be used in conjunction with other tools and analysis.
Okay, I'm starting to get the message. No silver bullets in technical analysis.
No.
It's all about putting the pieces together.
That's right.
So, and there are even more specialized tools out there like point and figure charting, which ignores time
Right.
and focuses solely on price action.
Right.
It uses X's and O's to represent price columns, filtering out the noise and highlighting key support and resistance levels.
That's right.
X's and O's. It's like playing tic-tac-toe with the markets.
It is. Yeah.
All right.
It can be particularly helpful for identifying potential price targets based on the size and shape of the formations on the chart.
Okay, I'm adding point and figure charting to my list of things to explore.
Well,
But before I get lost in the weeds of all these fascinating tools, what about the bigger picture? We talked about looking at multiple time frames, but this book also mentions something called intermarket analysis.
yes. Intermarket analysis is about understanding the relationships between different asset classes. The idea is that markets don't exist in isolation.
Okay.
They influence each other.
So if the U.S. dollar is weakening, it could be a bullish sign for gold prices.
Exactly.
Interesting.
Or a rising oil price might impact airline stocks negatively due to increased fuel costs.
Okay, so it's like a giant web with each market strand connected to the others.
It is, yeah.
That's a whole other level of analysis.
It is.
Wow.
And while the book doesn't go into great depth on intermarket analysis, it highlights its importance for understanding the broader context in which individual markets operate.
I'm definitely intrigued. It seems like the more you learn about technical analysis, the more you realize there is to learn.
That's the beauty of it. It's a journey of constant discovery.
Okay, before we lose ourselves in the vastness of the market cosmos, this book also talks about trading systems.
Okay.
What are those, and are they the holy grail of trading that some people make them out to be?
Well, that's a good question. A lot of people are looking for that holy grail.
Right.
But the reality is, trading systems are a tool. And like any tool, they have their strengths and weaknesses.
They sound intriguing.
Yeah.
Like a set of rules,
Right.
that take the emotion out of trading.
Yeah.
Sign me up. But I also imagine, they can be kind of rigid.
Right.
What if the market throws a curveball?
That's the inherent challenge with any system.
Okay.
They work best in certain market conditions, but can struggle in others. And the book emphasizes the importance of understanding that limitation.
So it's not just about plugging in a system and letting it run on autopilot?
No, not at all.
Okay.
Even with a system, you need to monitor the market, adjust parameters, and be prepared to override the system when necessary.
Gotcha.
Think of it as a co-pilot, not an autopilot.
Okay, so you're still the one in control,
You are.
but the system helps you navigate.
Exactly.
Okay.
And the book dives into different types of systems, trend following, counter trend,
Yeah.
Highlighting the importance of choosing one that aligns with your trading style and risk tolerance.
So if I'm someone who enjoys riding long-term trends,
Yeah.
a trend-following system might be a good fit.
It could be, yeah.
But if I thrive on volatility and like to anticipate reversals, then maybe a counter-trend system is more my style.
That's a good way to think about it.
Okay.
The key is to understand the logic behind the system and how it's designed to work.
It's like choosing the right tool for the job.
Exactly.
You wouldn't use a hammer to screw in a light bulb.
Right.
It doesn't work so well.
Not so much.
And no matter what system you're using, this book stresses the importance of money management.
Yes, absolutely.
Money management, that sounds kind of boring compared to all these exciting indicators and patterns.
I know it's not the most glamorous part.
But I guess it's important.
It's essential. Think of it this way.
Okay.
You can have the best trading strategy in the world, but if you blow up your account with one bad trade,
Right.
it doesn't matter.
Ouch.
So money management is about protecting yourself from those account-killing trades.
So it's about like determining how much risk you're comfortable taking on each trade.
Yes.
Setting stop loss orders to
Absolutely.
limit your losses.
Yep.
And managing your overall portfolio size.
All of that. Yep.
So even if my system generates a buy signal,
Right.
I still need to decide how much to invest
You do.
and where to set my stop loss based on my own risk tolerance.
Based on your risk tolerance, that's right.
Right.
A good money management plan will help you stay in the game,
Okay.
even when the market throws those inevitable curveballs.
It's like having a safety net under your trading tightrope walk.
I like that. That's a good analogy.
Gotta stay safe out there.
You do. And remember, even with the best analysis, the market can still surprise you.
Oh, for sure.
That's why managing risk is so crucial.
This has been an incredible deep dive.
It is.
We've covered so much.
We have.
Trends, patterns, indicators, systems.
All of it.
But you know what really struck me?
What's that?
This concept of intermarket analysis.
Yeah, it's fascinating.
It feels like a whole other level
It is.
of understanding the markets.
And it's something that, while this book just touches on it,
Mm-hmm.
it's definitely something worth exploring further.
Yeah.
Thinking about how different asset classes interact with each other,
Right.
it can give you a real edge.
It's like realizing the stock market isn't a self-contained bubble. It's part of a larger ecosystem.
It is, exactly.
Yeah, and understanding those connections can help you anticipate potential shifts and make more informed trading decisions.
Absolutely.
Well, I'm definitely going to be doing some more research on intermarket analysis.
Good.
This whole deep dive has opened my eyes to the depth and complexity of technical analysis.
Yeah, it's a fascinating field.
Well, thanks for being such a fantastic guide on this journey.
Oh, it's been my pleasure.
I feel like I've gained a whole new perspective on the markets.
I'm glad to hear that.
All right, fellow knowledge seekers, that wraps up our deep dive into the world of technical analysis.
Hope you enjoyed it.
We hope you enjoyed the journey
Yeah.
and that you're feeling inspired to start applying these concepts to your own trading.
Absolutely. Technical analysis is a powerful tool,
It is.
but it's not a crystal ball. Use it wisely, manage your risk, and never stop learning.
And who knows, maybe you'll be the one to discover the next big market pattern or indicator.
That's right.
Until next time, happy trading.